I think one of the questions portfolio managers tell us they continue to be asked is what's going on at the front end of the curve with Libor OIS, which became a sort of gauge of fear back in the financial crisis. And we've seen that spread dramatically move again. What's going on? Is it purely technical?
Yes, good morning or good afternoon, and thank you for having me. It's certainly a very topical topic for our clients, especially as we talk about corporate treasurers who are investing balance sheet cash very much in the short end. And I think when we see the spike in Libor, as you alluded to in the past, call it during the financial crisis, that was definitely a symptom of poor health in the financial system. We don't think that's the case these days. As you alluded to, we do think it is as a result of technicals in the short end, whether that's issuance on the Treasury side combined with companies that are selling out of short-dated paper as they think about repatriating cash from overseas back to the U.S. So I think there's a couple of different things that's driving that spike in Libor.
Kathleen, one thing that's been driving a lot of activity is just how high yields have gotten in very short-term rates in the U.S., certainly relative to anywhere else in the developed world. I'm wondering, can you give us a sense of just how much more corporate treasurers are earning as a result of that, and whether they're actually putting more of their money in cash rather than investing in riskier assets at this point?
Yeah, no, corporate treasurers in general tend to invest in very risk-averse strategies. So they're usually investing in bank deposits, money market funds, short-term or short-duration fixed income strategies. So they tend to live in that short end of the yield curve. So I think you see in the U.S. with rates now in a hiking cycle, and certainly as you alluded to with very short-end rates even spiking, there's more options for treasurers to think about how they try to maximize the returns on that cash. I'd say if you contrast that to other parts of the world and treasurers here who have multinational treasuries and multi-currency treasuries, if they're holding euros, that's a much bigger challenge in terms of negative interest rates in Europe.